Aloha! Welcome to Ascending Traders, a show hosted by yours truly, Birdy, focusing on technical analysis for the everyday trader and monthly guest interviews. If you want to learn about candlesticks, chart patterns, price action, support resistance, Fibonacci, or if you want to gain insight and wisdom into the financial markets from FinTwit's finest traders, then you are in the right place. With this channel, I will do everything in my power to produce fun content that will help you progress as a trader. If I can inspire or help one person, then it's enough and I've done my job. Mahalo nui loa for checking out Ascending Traders, and of course, let's ascend together towards financial freedom. For this episode, if you hear the theme song, it means we experience technical difficulties. Thank you. Aloha, everybody. I would like to welcome Bill Stocks and Thoughts today. I am super excited to have him as our first guest on the inaugural episode of Ascending Traders, and I could not have asked for a more respectable, knowledgeable, and authentic guest as him. So welcome, Bill. Welcome to the podcast.
Mahalo, Birdy. Mahalo. You've been on the island before, and it's life's different and life's great over there. It's a wonderful place, and I'm feel honored to be the inaugural podcast for you, and I'm looking forward to the many episodes ahead, just like I am with Slap the Ask.
Yes, we are building a nice community in the OTC markets. It's all about just making connections and supporting each other, and I could not have asked for better support from Mangrowth and Luke. I mean, you as well. So it's wonderful to be a part of this new journey towards financial freedom and having all of this available content for novice and veteran traders to enjoy together. So thank you.
Anytime. It costs 0 cents, to retweet a good podcast ad. I mean, it really doesn't cost anything. So I don't know what would stop people from just spreading the word about helping novice traders and helping experienced traders. I mean, I've been in the OTC off and on for 17 years. So, and I've had my ups and downs, and I still think I have plenty to learn. And there are many great minds that I look forward to learning from.
Yeah, exactly. The financial markets are humbling in that respect. You've been trading for 17 years, but there's always something to learn, right?
Yeah, I agree. It's quite an experience, and you have to apply what you learn too. So I think one of the big things that we're going to be talking about this podcast is my past mistakes and how I've learned from those mistakes and how I've avoided mistakes or made big profits from doing things I've done right versus wrong.
Yeah. So let's get started. You briefly mentioned that you've been trading for 17 years. So just to give a little bit of a history of yourself to the listeners, what goals do you have set for yourself?
Well, one of the things I had set for myself was I wanted some financial freedom. I know it's cliche, but it started in the family. Back in the 1980s and 1990s, I watched my father and my grandfather. They were reading the Wall Street Journal, watching the Stock Channel when we were on vacation. I mean, my dad is a very frugal guy, and so am I. Maybe not to the extent that he is, but whenever we went on vacation, even though we didn't have cable at home, the first thing that would happen would be my dad would pick up the remote and turn on CNBC, and you would have to wait for the stock you have to show up. So we had to wait till Valley Total showed up, BLY, and we had to, and then we could do whatever we wanted. The party could begin. So when we were on vacation with kids, my dad watching the Stock Channel whenever like we were getting ready to go out in the evening. That was like a big formative part.
Right.
And also grandfather talking stocks. And even when I was in college, my cousin was into him. I'd watch Kramer's Mad Money more for the entertainment factor than the education factor. I was actually on it about 16 years ago, and I just wanted to speak the Kramer round, and that was quite a thing.
I'll have to go back in the history and listen to those episodes. Maybe I'll hear your voice. That's fantastic.
Yeah, I actually, I could send you the video. I have it on my phone, so maybe after this podcast, I'll have to send it to you.
Yeah, that's awesome. I love hearing that. And I have a very similar background as well. When I was a adolescent, I would just run around the house and I'd see my dad in his office and he would receive these massive packets from E-Trade. And I wasn't able to process what stocks were. But I think that was part of the motivation of why I always was interested in the financial markets. It's because during my younger years, like the formative part of my years, I saw my dad being relatively successful in the markets. And therefore, as I got older, I strayed away from that slightly, but now I have finally dove deep into that, into the markets itself, and it's been fantastic.
Nice. And how old are you now?
27.
Oh yeah. So when your dad was doing that, you were an adolescent. That was probably when I started trading. So big 4-0 here in January. So
Yes.
you can still learn.
Exactly. Super humbling. Over your 17 years, could you discuss your most memorable moments and your least memorable moments?
Yes, I think that's a good way of phrasing it too, Birdy. Let's start with the least memorable moments. So in 2008, when I first had like a big guy, I had a big guy job in 06, but I was living in a high cost of living area where I couldn't really save any money. So I was living paycheck to paycheck. But when I moved back temporarily with my parents, I was bringing in the bucks and I was figuring, hey, I'm going to write a big check here to Schwab and see how I could do in the OTC market. But what I was doing was, and I was following these fake gurus on Investors Hub. Yeah, this has nothing to do with FinTwit. This is Investors Hub. And that's when I talk about fake gurus, I talk about people who are reminiscent of those people. The ones who tweet about a stock when there's a lot of momentum, when they've probably front loaded a stock. And I like BB Stock, the best in the business, who's navigated markets, posted annotated charts, and I would learn from those annotated charts and apply my knowledge. But the thing was, I would be following the wrong posters. I would buy, and often I would buy near the top, and I wouldn't cut my losses soon enough either. So I lost a great deal of money, several $1,000s. And in 2009, another tough love moment, which I replay it quite a bit when I see a momentum play. I know there's a lot of temptation that people are saying, oh, you have to be in this. And I flash back at the moment when my father intercepted the mail. He thought it was his, but it was mine, my 1099, and he saw all these losses. And oh, I heard him just screaming to my mother. And then he gave me a talk. He's like, you never trade penny stocks again. And I knew what I was doing. And a lot of those losses, too, were on cheap NASDAQ and American exchange stocks that were about like $1 a share. And I just didn't know to cut my losses. So I'm educated people on FinTwit because of the past experience I had then.
Absolutely.
With losing money. And I don't like seeing newer traders make the same mistakes. I feel it's my duty to pay it forward and to be as honest and straightforward as possible.
Not to say that doesn't happen too often on FinTwit, but there are a lot of individuals that have their own interest in mind, and they don't necessarily care about the newer traders. They use them to their advantage, right? When you have 20,000 people and you post certain stock tickers, a pretty penny of those will buy into that specific company, and they won't necessarily look at the chart. And I think that's such an important part of the entire process is if you do like a company, you definitely need to preface your purchase order with the chart before you proceed, because I think that's where a lot of individuals, and myself included, and I know you as well, that's where we've gone wrong in the past, is we buy a stock at top and we never look for price to retrace to support.
Yeah, and there's another mistake I want to talk about too. And as legit as a company is, I mean, I love Venue. We'll talk about that a lot more later. And I'm always looking at with some of my profits. But no matter what the stock is, never put all your eggs in one basket, especially after you put in a lot of hard work to build up your account. This happened to me a couple of times. There was a call, I'd like to call it that, in 2010, and the leader would tell people to buy and hold stocks, and he'd find low floaters, but they didn't have much due diligence. He'd actually make it up a little bit. And all these people who wanted to make a better life for themselves would buy and hold. And when the price got up real high, he was selling while telling them to buy and hold. I mean, I actually broke the rules a little bit. I cut my initial investment plus maybe 30% and rode the rest, and then rode it right back down. So it wasn't as bad, but for many other traders, it was their livelihood. And
right.
His I caused some known divorces.
Oh,
Which it's a shame that
yeah.
you have some self-oriented people that just ruin people's not just financial life, but married life. So I'm not for it at all.
Yeah. So there are, like we've mentioned, there are many FinTwit traders that just blast companies every single day, every single week, and monthly. But on your end, it's evident that you care about education because you present both the fundamentals and the technicals to your plays, and you consistently post both. And I think that's a wonderful part of you as a trader, as a human being, really. And it makes me wonder, why do you think education is so important?
Yeah, because I believe, in minimizing risk and maximizing reward. I know sometimes there's a lot of noise, a lot of emotion going on FinTwit, but with all that noise, people forget to calculate the risk and be like, hey, how much can I make from this really? If you buy something, I know one of our Twitter spaces, you made a great point, Birdy. Why get something that's up 300%? Yes, it may go up another 10, 20%, but it could easily, even if it's still up 150%, yeah, they'll use the look on the bright side. People who bought that will be down 50%. So buy something that hasn't taken off, that's still on the launch pad. Compound your gains, cut some profits, maybe ride some if you still think there's momentum, because sometimes there is a lot more momentum. You have to just be adaptable and play the trade. So I educate people on just basic math, think about your exit strategy too, and scale out and scale in so that you are meeting your goal of making money rather than making a rash decision and losing it all.
So you talk about risk management. Do you have a certain percentage in which you cut your loss, or is it more so you kind of just eyeball it and you reference the support that it might be trading near and then cut it near that specific price?
Well, if I know the story's not going to be for a while, no, I'm not talking about venue, but I'm just talking about like something a little more volatile and it's starting to lower Bollinger. And I can show some charting examples, in the last 15 minutes of our discussion to cut the losses. Or if the story changes for the bad, let's say current, and all of a sudden they become delinquent SEC reporting. If they become delinquent SEC reporting, that's sign saying, suspend me, SEC. Yeah, so like news of a reverse split, for instance, is another big thing. Pretty important to take into consideration. And I'll give a good example of that. In November, I flipped QUTR a couple times. It was a popular play, which actually introduced me to a lot of great people like Solly, Tesla Queen, ABC, and Quite Wild Rhino, which was a big one, and quite a few others. And that opened the door to other great people like you and Six. So when I was going back to QUTR, there was an announcement in the morning that they were going to do like a filing leaked out about a 1 for 1,000 reverse split. And yes, I was down on it, but for the amateur hour, the first 30 minutes of the day, the price was up. Yes, it was up then. So I was like, I'm going to take my chances and sell. And I also knew trip zeros were getting hot. So instead of rushing into the play, I took my losses, and then the rest is history. That QUTR loss turned into a 4-bagger on HQGE. I know I was shouting it under deaf ears for a good 2 weeks, and it finally exploded, and I sold way too soon. I probably could have made like 200 grand on it, but I'll take 5 grand. And then I did CSOC from 002, and I sold that probably 4-bagger. And I played a few other trip zero plays, and I was at 20,000 end of September, 13,000 around Thanksgiving, and by this I was at 40,000, and New Year's I was at 50,000, and then January and February themselves I took advantage of the situation and I sold greed, and I've been between 260 and 310,000 since then, which is better than losing money.
Yeah, I love it. Never feel guilty for trimming your position.
All right, so I think the last thing we touched on was like if something's up like so much. I know people say to ride the rest, but the flip side is another thing people argue on FinTwit is have cash. Well, what easiest way to generate cash other than your paychecks. And what better way to generate cash than like selling a life-changing stock? I mean, I've seen it with like ENZC when it was like 80 cents, with TSNP from the trips to $1 something. And no, I wasn't in either of those. But if I was up that high, I'd be like, and all the indicators on the chart were just extremely overbought. And to be a millionaire, I'd be like, I'm selling. And I compound it in other types of plays that haven't run yet.
Exactly. And that's the beauty of the financial markets. There's always going to be another play. And that being said, there's no reason to fall victim to FOMO because there's thousands and thousands of tickers out there. There's companies that are emerging every single week, and therefore there are new opportunities to capitalize on the next runner. So with that being said, you just need to display a little bit of patience and don't buy a stock when it's fucking stupid green, because I know plenty of folks, myself included, in mid-February at the tail end of that bull market, right? That's when the market started pulling back around 11%.
Yeah, the
so.
SEC suspensions.
Yeah, and that as well.
Role, and GameStop and AMC played a role too.
Exactly. It was a wild market, and a lot of tickers. If you looked in February, there's a nice run up and then a very strong pullback. Hopefully folks have learned during that initial run up, you need to sell into strength because we do not know when the next market pullback will be. And you do not want to hold a ticker for 3 to 4 months after that initial uptrend, just because nobody has time for that. You don't have any available cash to buy the next runner if you're stuck holding bags.
Exactly. And I mean, and don't rush to spend it either. I'll give a good example. I had 20,000 and some change to trade today. So I think it was like $20,300. I only bought stock with about $1,800. Like, because I made some profits and I figured I could add to my Venue position. I was sub penny, and I figured I would add 100,000 shares to it. Just, dollar cost average down. If the due diligence doesn't change, the catalysts don't change. That is a bag. I call it a bag if the story changes, like we said earlier, like it gets a caveat emptor, a stop sign, or a delinquent. Or if there's massive dilution that they just won't switch the faucet to off. And Venue has none of those. I mean, yeah, there was a little bit of financing with more restrictive shares, but the float has been unchanged during the entire year of 2021 with Venue. It's 1.1 billion. In comparison, I know they're two different companies, but NSAV has 4 times the outstanding shares and ran to almost 4 times the February high of Venue. So it was like cents. Multiply that by 4 for Venue, and it's 60 cents. I know they're two different companies. I know I'm comparing apples and oranges, but I'm just doing some math with share structure. And the other thing is, it hasn't been pumped and dumped at all. The people who are in it are people who post due diligence all the time. I know a lot of FinTwit ignores it because it's not so exciting for them. I mean, they want instant gratification. But as we've seen many times, I mean, Chaka on FinTwit, and he's one of the realist tweeters out there, he was shouting ALPP, and there's tweets to back it up when it was 5 cents before its big run to the dollars, and it went almost to $10 a share. No, I don't think Venue's going to do that. I mean, you never know. I might just disappear to an island if that happens.
So I know many listeners will be curious about this. How do you find these companies before the crowd sets in? What's your due diligence process?
Well, I know I'm a little unconventional. I have Discords. I network. I'm writing a $1,500 to $300,000 a year book, which describes how I got to that point, like the good things I did, the mistakes I made, and the people I've met on the way. And a lot of those people I met, do good due diligence too. So after hours, I'll look at the stock, I'll look at the share structure, I'll look if it's current, I'll look at the history of dilution, I'll look at the chart, and I'll look and see like how many people are talking about this. If everybody and their mother's talking about it, then I'll be less interested. So my top 10s are countercultural. And
that makes me ask, what was the reason behind you posting your top 10s?
Well, it was kind of a fad at the end of 2020. So when I started my anonymous FinTwit account and I just wanted to focus on stocks, yeah, you might see a post about football once in a while, but no politics, just stocks and maybe some crypto.
Yes, and birds.
Yeah, nothing wrong with birds either. So it was a fad to post like top lists, like this is the watch list for tomorrow. So I decided I'm going to make my own, and I'm going to put it for the first couple months, like into February, I just do a couple short sentences. But then after the SEC suspension and after people should have been focusing more on pink current or companies trying to get pink current, actually with company updated profiles. And then the September rule came in, then decided I'm going to educate these people and say, hey, these are the stocks you should be looking at. The stocks that haven't had at-bats. Not the stocks that are down because they strike out all the time. I mean, I see some symbols. I'm not going to bash or mention any symbols, but there are some that just get hundreds of millions or billions of shares in volume like every day. And I'm like, why? And I know sometimes people are critical of one-tick flippers, but if you're going to one-tick flip something, flip one of those. It's so much, it'll do yourself a favor. It's so much easier to get out of it. I mean, I'll admit it, in December, I actually flipped HCMC and I made $100. Hey, that's more than I had.
Yeah, that's a good point, especially with HCMC and barcodes. It just goes up and down, up and down, up and down, just following that same support resistance and a barcode. And you can flip those easily. And it's insane how much volume, how much money is put into a company like HCMC in comparison to a company like Venue, you know?
Yeah, or VMNT even. It's the only SEC stable coin. I know there are a lot of good folks in there too. Neo.
Right, that's so special. Yep.
VMNT and VNUE, because I know some people are saying, I've heard some chatter on Twitter, and I am going to take it somewhat seriously, because once the stock becomes pink current, just to become pink current, you bet some of them will be turning on the dilution faucets next year. So you got to look at the companies that have been pink current, or OTCQB or OTCQX, and you got to look at the history of dilution. So Venue and VMNT pretty much kept their share structure the same.
Yep.
Legit business. People know about the companies outside of the people who own the stock. So the funny thing is, a lot of these companies, they're only heard of in the stock community and not like, do they have to offer?
So with a company that has no history of dilution, do you ever email a CEO asking if they will dilute in the future? Because not all, you know what I mean? Not all companies who have no history of dilution will refrain from diluting. There's always a possibility, especially if they need more funding to implement their business plan. So do you ever contact the CEO and ask those questions?
Reverse split, maybe yes, but dilution, no. I try to refrain from emailing CEOs if it gives them an idea that a bad business decision. I mean, it's like asking the teacher, hey, it's I know you didn't assign any homework on Friday, but hey, you didn't assign it. And then all the students throw spitballs at you, rightfully so.
Okay, yeah.
I don't want to be that guy.
Yeah, I totally understand that as well.
Talking about the patience place, like in low floater. So before I get to my charts, like I'll give you a good example of one I've been screaming like on Discord and on Twitter for 6 months, DROP. And I created Wild Rhino, and then someone who might have even more patience than me, BH Wizzy on Twitter, Barry. I know he has a very simple mindset, very disciplined trader, and he believes in more longs than I do. I mean, I like to mix between the short term, the midterm, and the longs. And DROP is like a penny and maybe high sub penny. So over time, with some of my shorter term profits, I accumulated 1.1 million shares of DROP. 80 million authorized, and I think we found out that 69 million float. And we knew there was a custodian. We knew there was reinstatement coming, which had happened. Sold some on reinstatement day. I sold some into February run, and I sold some like during the filings, and when Myanmar finally sold it. So yes, I exited my position. I'm actually swinging it right now. I bought the dip on drop, but from $10,000 I put into it, or maybe a little less, I made a profit of over $40,000.
Oh, that's wonderful. That's wonderful.
And patience pays off. I mean, look
Yes,
what happened with
exactly.
the left today. I'm so happy for people, you know, who knew what they owned, and WDLF really made a nice move. I mean, I'm not in it, but a lot of good traders I know are, and I'm very happy for them.
I was one of those traders that bought WDLF in early February. I thought I saw support, and I just I saw price action just plummet, and that was a pretty wild ride. But I added on those dips, I think 3 times total over the past handful of months, and it's been a wonderful experience watching it finally climb higher and higher, because I think it deserves so. The DD is there, and with the recent crypto PR, I think it has a bright future with it for sure. And again, the thesis never changed. So like you mentioned earlier, if the thesis doesn't change, then add on your dips and hold, and eventually it will pay off. You know, it doesn't have to be complicated. If the thesis never changed, then you shouldn't be scared about intraday price fluctuations. It's a part of the natural market cycle.
Exactly. There was a company, you know, it was a pretty big bid too, more than like the shares I had, and they went delinquent SEC reporting all of a sudden. They were pink current, low float. I mean, I'm not going to give the symbol name, but I cut my losses. I mean, it wasn't a big loss. It was a small loss, but still, had I still held, I'd be down more. And then like QUTR, I said earlier, had I held till lunchtime, the $1,800 in proceeds that I had to buy 6 million shares of 0003 stock would have been maybe $800. And the story would have changed. It wouldn't have been 1,500 to 300,000. I mean, who knows? Maybe I could have emotionally traded more and I could have blown it. Who knows? Maybe I would have 100,000. But by cutting a true bag, and no, a red stock with a catalyst is not a bag unless like, massive dilution.
And you know, I think with that being said, do you want to proceed with a charting lesson?
Well, I'm sure. Do you see my screen right now?
Yeah, that's perfect. Good old.
Yeah, I was actually getting ready to share my screen when you brought that up. Wow, our minds are thinking alike here, Birdy. I love it.
I love it. Yeah, it fit in real nicely. So I'm happy that you had it up.
Yeah, and I think we discussed, you know, good examples of patience play, short-term flips, and bags. I mean, I'm glad we've touched on the subjects that I want novice traders and intermediate traders to know about. So I think the past 30, 35 minutes have really been instructional for newer traders.
Absolutely.
I'll give my first example, and this is one of my biggest wins. It's not my biggest win. I made $53,000 on this stock.
Ooh-wee.
From about 12,000. So APTY, I know I heard a lot of chatter on Discords, and it ran from 0002 to, and I don't count paints at the bid as a price or paints at the ask as a price. For me to consider a stock reached a price, there has to be somewhat significant volume. So it went up to 0011 right after Thanksgiving. Yeah, so right here. So then it consolidated. Consolidation is pretty natural, and that's when you should be accumulating. Watch the accumulation distribution indicator, and the MACD was negative. It had been negative for a while, but if there are a lot of catalysts, like there was a company updated profile, the outstanding shares was only 2 billion. Mind you, it was a trip zero play. So I took a starter at 0007. And then throughout like December and January, it was going between, it touched 0004 a few times. I don't think it was that easy to buy at that price, but I added 0005, I added 0006, and I added enough that I had 20 million shares. I was like, that good, because the RSI, another indicator I love, had room to run. It wasn't like right here in the 90s or like the 70s. I mean, the 70s mean it could still run a little bit. I mean, I wouldn't buy it there, but I wouldn't necessarily cut my whole position if there's still catalysts. But during this time, there wasn't much volume. So I know a lot of people say, oh, buy volume. I'm the opposite. I say sell volume. I've been adding on. And then I knew that it only took 4 ticks, and the ask wasn't that big on the level 2 to get to blue sky breakout level. And then finally in late January, it started. We hit a little more resistance at 0014, and then I'm going to pull the Bollinger Bands up here. When you hit update, you'll see some green lines. Oh, there we go.
Yep.
So I took a charting course in Chicago in 2010, and with charting, There's no, I mean, there are various right ways to chart. Some people overanalyze it, which is fine. If it works for them, great. But I'm pretty basic with my charting.
Yep.
I use the 5-minute on TradingView for big boards and active stocks, and I use the daily chart mainly for OTCs.
Mm-hmm.
Stock takes a ride on the upper green line, it's bullish. And when you know catalysts are coming, and it broke a high it hadn't seen for a long time, and I've seen this happen many times over my 17 years of trading, it's going to run parabolically. It's like a gift. So I knew that it had room to run. The patience paid off. And then after it hit 002, I started to scale out, and I would sell like 300,000 here, 400,000 here. I like having Schwab because they're commission free, and I'm able to do something like that. Someone throws up a big 6 million ask and the spread's like, say, 0027 by 0029. I'll actually, even on a quiet day, I'll undercut them with 0028 and have a size of like 17,000 shares. But hey, it's scaling out. And if you have a big amount of shares, you scale out whichever way possible. And you do it to help people in the stock, not hurt people in the stock.
Mm-hmm.
And throwing a big wall, I actually think, is arguably worse than hitting the bid.
I have a question just for the newer traders. How necessarily would you explain and trade Bollinger Bands?
The way I look at it more is like visual. So the tighter they get, you know there's going to be a run in either direction. So I use that to my advantage. If I know there's a good catalyst coming, let's say like with CBYI, which I traded recently, made a few $1,000s. CBYI was a tight Bollinger Band, but there's a shareholders meeting coming up. So based on the catalyst, it's more likely that you'll see a break to the upside. So the quieter it is, the less distance between the top and the bottom. If there's a lot of downward momentum and panic selling, you're going to see it ride the bottom Bollinger, which you saw like with NSAV, which I'm going to pull these Bollingers up too, when it was, and I know this is a more recent chart, so I'm going to zoom it out to a year here. So it was doing a gentle ride down the lower Bollinger Band here. That means there's downward momentum. And if it's riding on the top one, there's upward momentum. So a lot of these people who trade momentum, I mean, occasionally momentum trade, but historically, that's been a source of losses for me, so I rarely do it. I'd rather, have the patience when they're tight and then sell the rip gradually. Like APTY, going back to that one, it took me over a month to sell my shares. Like I wasn't out until the beginning of March.
Okay, yeah.
Right at the end of February. It took me probably about 35 days to sell. So I'd sell a few 100,000 every day.
Have you ever traded Bolly Bands buying at the lower band and then selling as it hits the top band? Is that a valuable strategy for you, or do you not use that?
No, because it could keep going down. There's a saying, never catch a falling knife. If I were to like trace something, let's say the whole candle, and here's another interesting thing. If the whole candle is above the upper Bollinger Band, we'll look at AUNXF, for instance. This was a quick runner, and I still think it has, momentum over time, but it just needs to take a breather. So we'll pull up the Bollinger Bands here. 95% of the trading is within these two bands. If it runs too hard, an entire day's candle could be above the upper Bollinger, which means, hey, slow down, I need to catch up here. So don't buy during that time, and that's a very, very opportune time to take some profits.
Yes.
Reward
absolutely.
yourself. So this day, and look at the volume bars. You had 300 million shares at 1.5 cents. So that's $4.5 million of volume. So if you had a $20,000 position, there was no excuse to cut some profits.
So I know AUNXF is pretty popular in FinTwit right now. And looking at this chart.
It is, and I'm considering buying it in the future.
For those that are interested in, they like the thesis, they like the DD that has been presented to them. Looking at this chart, where would you direct them in terms of finding an appropriate entry?
Well, right now, I would call it a wait. I mean, done as much DD on AUNXF. I still need to do some on it. So maybe there are probably a lot of people on FinTwit who would have a better idea. But the chart alone, I would call it awake because the MACD bar started to go down a little bit, and it might be sideways for a while. It could be sideways for a few days or even a few weeks. And that's when you enter. Once you realize that the stock price isn't moving, the volume's dying down, the interest is waning, that's when you start a position. Buy when there are fewer people talking about it, and sell when there are many people. Sadly, many do the opposite.
Yeah, and like you mentioned earlier, wait for those Bolly bands to really trade closely around price. You want them to squeeze, and then once that candle hits the top Bolly, that's when you know that an uptrend could be on the way.
Yeah, and you don't know how long that uptrend is going to be. So, like, don't get greedy. I mean, scale gradually, just like scale in gradually during the quiet, scale out gradually during the noise. So, like, here's, speaking of greed, like, here's an example of one. NSAV. I know before our podcast we were talking, you definitely wanted to see that chart. So the first like zoomed out view is it went up to a nickel. Like everything was running in February. And it was just gradual decay. People lost interest. Look at the volume bars here and look at the volume bars there. Just quiet. I mean, I didn't know much about the stocks, so I'd rather know a lot about a few stocks than a little about a lot of stocks to avoid blind entries. But right here, there was just quiet. And then all of a sudden it woke up, and see, when it breaks that resistance, you had a nice 300% gain. But then look at the RSI. This is an indicator I love too. And then I know there are a lot of other traders like NKBC who like the RSI. If it's above 85, it's like definitely start selling some. And if it's in the 90s, don't buy. It could run for a few days. It could run for a few minutes, but sell.
Right.
Take your profits. You earned it. There are many people envying you right now. Don't blow it. So like it was like 15 cents, and I was like, wow. It reminded me of GGII back in May, and that's every other tweet on FinTwit was GGII, and I was like, wow. Like, don't you get the picture here? It ran from sub penny to 17 cents within a short period of time. And the share structure is miserable. Do you think you're really going to make money by buying at 17 cents?
It's because there's so much noise on FinTwit, and that's one of the negatives of it, right? People are greedy because they want the next TSNP. They want a ride to $1. And I understand that. It's just part of trading, right? You gotta pay your trading tuition for the first year, 2 years, 3 years, until you kind of really understand how to trade the markets.
And that's a good way to look at it, Birdy, trading tuition. And I feel like my purpose on FinTwit is to reduce that tuition. I want to, use my experiences. And yes, I mean, I'm not going to be perfect. I mean, I missed quite a few too. I mean, TGRR was a disappointment. Yes, I'm glad I scaled some out early, like in February, and then on the pops. And no, I'm not going to go telling people to buy when it's overbought. That's not me. I like to talk about it more when it's quiet and oversold, or just sideways and boring. Sell Trades OTC, another big account on Twitter. He's recently brought up a point about buying low floats, buying when nobody's interested. And I piggybacked on it, and I was like, yes, buy boring. It's not glamorous, but that's where the money's at.
Exactly. Yeah. So what is also being thrown around FinTwit right now is SFLM, a pretty prominent seller on eBay. They sell gold and other jewelry products as well. And they have, I think they're projected to get around $12 million or so, $11 million for the year. Yeah, SFLM. And like you said, I bought this months ago, knowing damn well that they were going to continue earning great revenue. And every single show that they went to, they would gain hundreds of thousands of dollars continuously. And it was just so simple. But when I looked on iHub, I looked on StockTwits, I looked on Twitter, not many eyes were on it. But knowing that they were pink, knowing that they, verified profile and such, and knowing that they were an actual company earning income, it was just an easy buy for me. And now more attention is to it. But it all goes back to buy when nobody's talking about it, and sell when it becomes popular. Sell into the strength.
Exactly. And actually, I did that on Friday. I only had 300,000 shares, so not many shares to affect the action. So I had swung it from 0042 to 0049. Easy $210. But looking at it from term, I'm still watching this because come September, I think there's an account and he's reiterated quite a bit. Kent's Brokerage, a lot of followers, but not all big follower accounts are bad. Many are good, like MN Go Trader, Wild Rhino, and Kent. And Kent said soon there are going to be fewer tickers to choose from. So, and there'll be pink current and the fully reporting. You see the authorized is 1.5, the outstanding's close to the authorized, and there are many restricted shares. And there is a verified profile, which means they care about communicating to the share. It's not like, oh, let's just sleep on it and let it decay.
Yeah.
And it's
not
004. So the market cap is reasonable. You know, they're catalysts. Not many people are talking about it. So I'm going to watch the chart on this one. And SFLM is on my watch list for sure.
Absolutely.
I was like 6 cents about it. And I know he's big on it. And
he loves it.
Rip to Rip and many of his other close followers.
It's a great play. They're a prominent business on eBay. And with that being said, with the upcoming SEC regulations, it's just this supply and demand, right? There's going to be less companies to buy. So therefore, there's more money being thrown towards pink current companies and pink limited companies as well.
Custos, they're hot pink current. I've been gradually restructuring my portfolio towards those types of companies over the past 2 months. And if someone wants to like keep the stop sign and not do anything, yeah, cut the losses. That's another good example.
Can you look at the chart again? Let's look at the chart for SFLM.
And I will say, I wanted to give a shout out before we dive into this chart to Jester Trades. He was on episode 6 of the Slap the Ass show, and he's a genius.
Amazing.
Younger than me, and he has all his ducks in a row, and his trading method is pretty amazing. He puts a lot into it, and I'm curious to learn more from Jester myself. So
yes, I totally agree. One of the smartest in the game. He keeps it real, you know, and he simplifies it. Like you said, you keep your chart simple. He keeps his chart simple as well. It doesn't look like a 1990s club. The charts are legible, and he just understands price action so well. It's extraordinary. And if you haven't watched it, please check out Slap the Ask. Jester Trading is on episode 6. I promise you that hour and a half will change your life.
Oh, I know. And Justin, one of my good buddies from college, he watched it twice. I know it's a long episode, but it's worth it. I watched it. He watched it twice. He even watches Slap the Ask. Probably watched this too while he works out. Wife, they're really getting into trading, and I think they're super passionate about it. So so now go into this chart. There's a common theme here. It's rarely riding the Bollinger Bands, and look how tight they are right now. The Bollinger is at 0049 and the lower Bollinger is at 0037, 0038. And the MACD is pretty close to even. Actually, let's zoom in a little more here. Let's go to 3 months. Yeah, the MACD just went negative, but it's so close to zero that it doesn't matter too much. So like the MACD, the accumulation indicator, I know I'm not a big fan of it right now, but all the other indicators are looking good. And the RSI has plenty of room to run. So it's just due for a pop. Like look at the 300 million volume day there was in July, and it ran to 2. That says something. So even if you're just looking at to scalp out when it runs, that's an easy 2-bagger right there.
Exactly. And it looks like it's following support really well. You know, you're right. The accumulation distribution line is not the prettiest. From what I see, just because price is respecting that, 0.004 level relatively nicely, it's something to look into. And the previous trading session has a really bullish candle, and it looks like I think it broke the 50-day moving average. I'm looking to see if it climbs higher, but
briefly it did. Yeah. I know people are accumulating that, and they're not front loading it either. I mean, people are talking about it. I'm starting to put in my top 10 more often, even though I don't have a position. I don't have to own my top 10 stocks. There are many great stocks that I research, and I know they're not going to move without me. And yeah, once in a while one might, but still, I know I preach it every day. You don't need to front load any stocks because it's not going to run without you. And if it does, which is rare, there's always another one.
Yep.
So 0045 is the key thing. So if we have a solid white candle with a low of 0045, I think that's a great sign. And I think we're going to see a really nice run.
Yeah.
If it happens.
I totally agree. It's definitely due for a run. It'd be something to watch.
Yeah, and like CBYI too. I know I have this chart up. So let's go back to CBYI. And like right here, it was consolidating, but I knew there was an event-based play. It broke the 50-day moving average. So I sold into strength. I've been accumulating. My starter was a little high, but just as important as scaling out, and I know Jester preaches this too, is scaling in. And I bought over 7 million shares of this at 0039 and down as low as 0031. And I sold it all like between 004 and like 0045.
Mm-hmm.
I know it seemed like much of a move. I made a couple thousand, I'd say. And you never go wrong selling into strength.
Exactly.
And like Mike said, like cash is an important position. I know I said it earlier on the show. I sold over $30,000 worth of stock, and having that cash has me ready for the next opportunity or just to enjoy the cash.
Exactly.
Don't rush to just jump in everything. Yes, I mean, PRDL, I've accumulated that in the mid-teens. I have about a little over 16 million shares. I could have probably bought today another 10, 11 million. I bought a few 100,000, but I decided wait, because manage your risk. What if it downticks 1 or 2? I mean, I don't think it's going to, because there's been nice bids and people are accumulating and the catalysts are there, but don't overstick yourself in a stock, and then you'll be just watching and waiting and having to find other ways to generate income instead of doing some short-term trades. I mean, the longs are great, but you got to mix it up a little bit.
Yeah, absolutely. So one last question. Let's look at CBYI, the current chart right now. And we've mentioned scaling in and scaling out. Can you briefly just go through that process, looking at this chart, just to inform the traders on where they should scale in, relative to support, and where to scale out, right, into strength. So could you just go through that real quick?
CBYI was a combination of charts and due diligence. Back in June, there was a press release, and this is where it happened. I actually flipped it here too for a few $1,000s. Yeah, I looked at the due diligence, SSM Monopoly, custodianship agency, one of the most reputable. I know D-Lars Trades really likes that.
Mm-hmm.
I put a note in my calendar probably 2 or 3 weeks before the shareholder meeting on August 17th that was specified back in June. And I'm trying to get into that habit, of having a calendar for event-based run. So I'm saving some cash for like mid-September when you're going to be forced to have a pink current. So right around here, it was like trading tightly between 39 and 45. So I took a starter. I probably added about 3 million. And then it dipped. But here's a funny thing. Level 2 comes into play too. People kept putting in bids, but people would keep hitting the bids. I was like, no, you don't do that. There are many wise traders on Twitter that say, hey, you don't hit the bid when there's like a lot of accumulation going on. Actually, let's pull up this indicator, accumulation distribution line. Yeah, that's another thing. When the price was sideways, the price action during this whole time, this was rising. So it's like, hey, people are buying the stock in preparation for the conference call.
Mm-hmm.
And then, even for cheap NASDAQ stocks, I don't like to hold during a conference call, because I'd say about 90% of the time it tanks.
Yeah.
It's like, okay. I always joke about that with Solly. He's like, oh no, not the conference call again. So then there was a nice stick of volume here. So when you see the big volume, you see the break above like a long time high, you start to sell. So in little pieces. So I sold like 300,000 here, 200,000 there, 400,000 there, 150,000. I probably took about 25, 30 sell orders to sell my 7 million shares. No, I didn't throw 4 million shares on the ask. Yeah, there were a few people that did that on the run. Even in the high volume, you don't do that. People throw the whole daily volume on the ask. I was like,
yeah. Yep.
Don't help yourself. You don't help others.
For the newer traders, why don't you sell on the bid?
I don't usually sell on the bid because it causes the price to go down, especially if the bid is thin. Now, during a run, I have a ton of shares like RMRK. I bought in the 20s, and then it was in the 30s, and someone had 30 million shares on the bid. Yes, I was selling at ask too, but I placed limit orders on the bid to get out of it, a few shares. Because it's like, hey, I could scale out and still, ride some and still not hurt the bid. It's still like super large.
Mm-hmm.
But I like to set my sells and forget them, like GDET. Yeah, I could have bailed out at 0007. It was oversold at 0008 because there was a party going to jail, but like the company wasn't going to get suspended as per the due diligence. It was just because of that party. So I wanted a one-tick flip out of it. So I bought my million shares at 0008.
Mm-hmm.
There's a lot of volume. I set my limit at 0009 and I forgot about it. I was like, set it and forget it. It executed today. $100 more in my pocket. So so when you place your sells and you place your exit strategy before you buy the stock, you can place your limit orders and not fall into temptation to be greedy, because you see a lot of FOMO tweeters. You see a lot of people say, no, don't sell now. This is going to $1. Everything's going to $1. Actually, TSNP, I was in a little disbelief because I've never seen a sub-penny ticker go to $1 in my years of trading, and it's very unlikely it's going to happen again. It's like a 1 in 20,000 chance.
Yeah, the only ticker that I give a price target of $1 is any ticker trading around 90 cents.
Yeah, exactly. Exactly. I mean, going to $1, if it's like 75 cents, the chart indicators have room to run, and the share structure is super small, like VMNT, then yes, it's going to go to $1 because it has a market cap still lower than many sub-penny stocks with really bloated share structures. Yeah. So thank you so much, Birdy. Do you have any other questions for me before we end this?
We've been talking for an hour, and I think we've covered so many fantastic topics, and the charting lesson has been wonderful as well. I hope that everybody listening to this can gain a little bit of insight from Bill's stocks and thoughts.
Much appreciated. And at Birdy Trading is a must follow. And many of the accounts that I referenced during our talk are also must follow. So they all bring great insight. They've helped me greatly, and they'll help you greatly. So
yeah.
Appreciate your time, Birdy. And I look forward to seeing future podcasts.